June, more than any other country. China and Netherlands and U.S. are next biggest there. And on we go to the markets. Okay. Oh, here we go. A little different way of getting in here today, but nonetheless, these are Friday unless otherwise noted. The FTSE was down 28.60. In Amsterdam, in Amsterdam they were down 4.62. In Frankfurt, the DAX was down 94.27. In Paris, they were also down 37.36. In Brussels, 44.44. In Madrid, 75.40, all down. In Zurich, 49.72. They're all in negative there. In Moscow, they were actually in positive territory on Friday, 14.20. In Johannesburg, also in the negative at 294.82. In Bombay, 61.74. In Karachi, 23.44. In Lahore, 46.40. In Colombo, 6.64. And in Tehran on Wednesday, 5.30 in the positive. Colombo was in the negative. In Sydney, they were down 127.80. The Nikkei at 60.12. In Hong Kong, the Hang Seng was at 177.19 on Friday. In Shanghai, they were 82.67 there. And the Dow Jones in New York was down 46.37. The Nasdaq was down 12.90. The commodities market out in the Midwest city of Chicago was down 5.99. And in San Pablo, they were down $1,434. 1,434, or 2.87. In Mexico, they were also down 59.08, or 0.13%. On to commodities, and we'll wrap up this oil pricing, Brent crude, etc. I think we went into a little bit of that, but we'll get the rest here. Nonetheless, Brent crude is down 90 cents on Friday at $48.56. It went down. The spot was down 52 cents at $48.78. West Texas crude was down 83 cents at $43.83. This is good, incidentally, for consumers. Consumers, as they say in the colloquial, need a break. T-Boone Pickens, Ohio, is still jumping for joy. He remembers $15 a barrel. Well, and let's see, cocoa, we always like to look at it, was up $50. On the Forex, gold was up $6.35 at $1,091.35. Dubai gold was up $5.30 at $1,089.40. And silver, for those that want to know, was up 16 cents at $14.75. See anything else? We'll look at the Euronext futures here. Cocoa's up $9 there. Corn futures were up $1.50. Wheat futures were unchanged. The Bloomberg Commodities Index was down 0.05 at 90.48. This will do it for us. For the for those in the business, make next week a productive one. For the consumer, keep your eye on the prize, particularly on energy pricing. That will improve your quote-unquote liquidity kind of out of the field there. And so the Fed is watching the job gains, but they'll also watch developments such as crude oil pricing, declines within that particular sector that largely don't affect the larger economy. But however, though, they do affect stock pricing, as we saw in Berkshire Hathaway, and their exposure and companies that are exposed to the energy sector, and particularly states that are already hard pressed, like Louisiana there, and Texas to a certain extent. They have much of the so-called Texas America. A lot of it was built on energy, but since they have diversified, and we will keep plugging at it. The numbers look good. We'll be looking at Q4. Now, September is when the Fed is targeted perhaps to raise the interest rate gradually. It won't be a significant raise. I'm not sure it'll be a 0.5% or 1%. It'll be very, very low. Exactly how many points it would be, but I think what the Fed wants the markets to get used to normalization and start moving rates up, although there is no inflation pressure out there at this point in time. There is some speculation out there, and particularly with gasoline, there's some gouging there. You can expect that to be out there, and those are some things we look at. In other words, an artificial inflated commodities market. You always will have some of that, but in the final analysis, the commodities market has to respond to the economic realities, and this is what you're seeing in the crude oil sector and some of the other sectors there, particularly with China doing its resetting, cutting its demand back. They need to do this. They had a large inflation. Looking at banking there, they're doing some things there on the line of a Dodd-Frank, get them in line with the rest of the world. They don't want runaway speculation or adverse risk or whatever you want to call it. And also at the same time, other economies. A couple of weeks, I guess, we were looking at Korea, and Korea had some, or anticipating some stimuli there. Let me just get one other thing now that I think of China. Don't want to ever forget China, and see if we can bring it up very quickly here. And bring it up there. This was from the Xinhua, I believe, a news agency in China. And a couple of little things here. We'll just hit on them briefly. Chinese investment rockets in Germany. This is from Xinhua agency. Increased rapidly in Germany. Chinese officials in a recent interview there in Q1 2015. Chinese direct investment in Germany amounted to $210 million, up 246% for the same period previous period a year ago. The Chinese Commerce Ministry showed in 2004 became the biggest investing China in Germany with a record 190 investment projects. Chinese investment in Germany is skyrocketing both in terms of projects and of value. That is from Wang Wengdong. He is a commercial counsel at the Chinese embassy there in Germany. A survey by the Chinese Chamber of Commerce in Germany last year showed that despite high labor costs, Chinese companies are willing to hire German workers in order to better be involved in the local economy, which is always a good thing. Let me just see if which is also we wanted to get here. This is dated on the 6th. Production growth in China's machinery sector. This is the same thing Buffett's getting into with precision outcast, or whatever it is, casting. Sector slowed sharply in the first half of 2005. Machinery Industrial Federation said this expansion expanded just 5.7% in the first 6 months, while growing 11% last year. China's total production increased at 6.3% in H1, and growth in the machine sector fell on the national average. This is very rare. The deacceleration was beyond expectation. A survey by the Federation showed machine makers were affected by shrinking demand, and this is the whole thing, demand. The sector may slightly warm up the later half of the year, that would be Q3 and Q4, to bring the annual growth to about 8%, which is not bad at all. Annual growth will definitely be lower than the 10% increase recorded in 2014. So we thought we'd bring you these little China things after we said goodbye, but nonetheless, have a good weekend, everyone, and we'll talk to you next week on the week that was. Check us out on Twitter, on our official feed there, and also on Facebook. We'll be appearing on Facebook, and we'll put that link in our reports. We appear now under the Bostonred, and of course, if you go to bostonred.org, you'll find us there. That's a work in progress, upgrading that integration between our other media offerings, the political one, Bostonred. This is the economic one, and the open source report, which is our technical report that we partner with our friends at Cranston. And with this report, we partner with our friends at Cranston Analytics, which used to be Cranston. What were we? Anyway, we were around a long time there. So we changed the names a number of times, but it's the same operation basically as things evolve. Now it's analytics. At one time it was Cranston Econometrics. We'll get that straight. Good day.